Hey everybody, Real Estate Ninja here. Still working on this, trying to figure it out. Hope you guys are doing great. Got a story about mortgage rates demand falling, even as rates fall. And that's very interesting. We have not seen that yet in this cycle. And I believe it is very telling on what is happening in the mortgage industry because people are getting very, very afraid. And we're gonna dive right into it. I'm gonna link the story below. It says mortgage demand fell last week, even as rates declined slightly. This came out of CNBC. Some key points to go over. The average contract interest rate for a 30-year fixed rate mortgages with conforming loan balances, and that's between $647,200 or less, decreased to 5.45% last week from 5.47% the previous week. Now that might not seem like a lot, but when we're talking about data and analytics, that is exactly what the pros are watching. So even though it fell off, 0.02%, the analysts are looking for, did it spur mortgage applications? Did it spur buying in real estate? And it did not. And it's a very, very important thing because even small fluctuations in mortgage rates, a lot of the times can lead to a spur or an increase in mortgages being taken out, right? But we're seeing that 5.5%, even at 5.3, 5.4, even, we're seeing that is still way too high when you compare it with the national average of homes that have gone up over the last 2 years. It is just too much. Why? Because inflation is stealing people's purchasing power. That is the big culprit here. And we have to realize that. So what has to happen? Mortgages have to come down more, or home prices have to come down more. One of them has to do something, and I don't see that coming down in the near future. All right, so let's dive back in. Sorry. Applications for a mortgage to purchase a home dropped 1% for the week, and were 18% lower than the same week 1 year ago. And again, 18% is a staggering number, especially when we take into account how many homes were on the market last year. Very thinly traded, very thinly, available homes for sale in comparison to where the market was, what the mortgage rates were. And now to see that we're seeing more properties hitting the market and still buyers are starting to regress, that's pretty impressive. It's pretty exciting because we're going to start seeing much lower prices. Now, it says total mortgage application volume fell 2% from the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. Demand stands at the lowest level since 2000. It hit a similar low in July. Applications for a mortgage to purchase a home dropped 1% for the week and were 18% lower than the same week a year ago. Potential home buyers are not grappling with higher interest rates, but with inflation and overall in the economy, and concerned that home values will start to fall. Now I'm going to stop right there and we're just going to chat for a second. I think that is very, very important to state. See, the narrative is out there now. Buyers are starting to figure out, okay, not only can I barely afford this home because not only the price went up, but the mortgage rates went up, but I could barely afford the electricity bill right now or the food bill. And do we see that getting worse? Yes. The reason why we see it getting worse is because we're seeing geopolitical threats around the world. We're seeing supply chains cut off, or we're seeing still a lack of goods and services needed to get food on the shelves, to be able to get the electricity to your house. We're seeing all kinds of issues right now, and it's not going to get any better. We have to go through a crash for things to reset. Every 7 to 10 years, I preach about it all the time on the Economic Ninja channel. It's about resetting. It's about getting back to basics. And that's what economies need. They always need healthy pullbacks to be able to move forward. Well, the problem is we have ran ourselves up against a brick wall, and I don't see any way out unless we have a crash. That sounds crazy, but it's also exciting because if you're ready for it, you're gonna be able to take advantage of it. So I hope you guys are getting ready for this. I'm going to link the story below. It's just yet one more sign that even as interest rates back off a little bit, buyers are not willing to go in there and take the plunge on their first home or a second home or even rentals. And I think you're about to see a lot of inventory hitting the market, especially as vacations start, coming out of people's budgets. People start spending less on going out. You're going to see Airbnbs start to falter a little bit, and either they're going to get turned into long-term rentals, or people that over leverage themselves with Airbnbs are going to start to liquidate. And that is going to be an exciting time because that's when the market gets flooded with inventory. All right, guys, that being said, I thank you so much. The Real Estate Ninja, man, I got to think of something new, is out.